Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. I like to read your guys' comments and then respond to your questions or comments that you have so everybody can understand, get a better understanding of what potentially, if you guys have questions or whatever, put it in the comment section. And I'm sure that a lot of people have similar questions. So here's a question. It says, Andy, if we had an overall market crash and you had $100,000 liquid to spend, then what companies are you going to look at first for adding cheaper shares? All the same ones you discuss regularly, or would you focus more on energy? And so it depends on your risk tolerance. I The way that you set up your portfolio, it depends on what you should go into. You kind of left it open, like if you had 100,000 liquid to spend, it's I don't know what your circumstances are. And I don't know if 100,000 is a lot or a little of money. I don't know if that is like play money or if you have other investments or if that's all of your investment amount. Because that depends on a lot of things. But I'll tell you what I'm doing. I've got like 25% in physical precious metals, like the stuff you hold, the physical stuff, not in an ETF, physical, store it, that type of investment. I've got like 30-40% in real estate. That's my exposure. And then I've got 40% in liquid. So 40-40-20, something on the lines of that, somewhere around that mix. I don't know for sure. I've never actually added it all up, but it's around there, I'm guessing. In that 40% of liquid, the stocks and equities and stuff like that, I've got about half of that in a 401k, mutual funds, royalty type investments, big diversified mining companies, things that I would consider to be lower risk. In that, I've got another 20%. That other 20% is my swing for the fences stuff, and that's been increasing quite rapidly. I've turned a very small sum of money, what I think is a small sum, to very big sum. I'm talking like it's over a 2-year period. I think I probably 4 or 5x'd it, the entire amount, which means there's some in there that have gone up way higher, like 20 times my money or more. So these are swing for the fences, and there hasn't been too many I've absolutely lost on. There's been a couple. I've had some small ones that have literally gone 80-90% down. So I manage that through portfolio allocation sizing, and I put 5% or less in each position, because if I lose a position, let's say I lose half, if I miss something, and it's going to happen to everyone. Someone's going to miss something, or if you're going to push the envelope, something's going to happen somewhere. If you lose 50% or 80% of your money, it's a 4% position. Maybe you lost 3% of your entire portfolio from that one position. Something on the lines of that. So I manage my risk through portfolio position sizing. Now, if I had a bunch of money, and if there was 100,000 liquid, something like that, and you wanted to swing for the fences, I would go with energy companies, probably like some uranium, some oil, something like that. Now, if I was doing it today, I probably wouldn't overweight those as much in terms of oil because they've already gone up quite a bit. Gold is sitting there and no one likes gold right now. No one likes silver as well. And those are also highly leveraged. They have pretty good leverage. I also like platinum a lot. So you could look at those as well. You could look at the physical metals if you don't have physical metals. That's one option. And I'm talking about the physical that you can hold. The reason I like physical metals is here's something that not a lot of people think about. Everything today is fast and you can transact it very easily. And that is great. I agree with that. That's completely awesome. But does anyone talk about, well, what about privacy? What about if someone wants to transact out of the system? Right now, we can transact out of the system with paper dollars. We've got paper dollars and we can transact out of the system, no big deal. What if the paper dollar went away? What would people use to transact out of this system if paper dollars were to go to zero or go away? Has that been priced into gold and silver and physical precious metals yet? To have that ability to transact out of the system basically without anyone tracking it? I'm just asking. because maybe that is a value that could be assigned to precious metals in the future that not many people are thinking about. I mean, obviously, I think about a whole bunch of stuff. I just keep thinking. I don't know why. My brain goes when I'm sleeping most of the time, and then things pop in and say, "Oh, that I want to be protected. It's secure. It's off the grid. It's all that stuff." But that's something that I value is privacy and security. And now I think there's other good opportunities in base metals as well, like copper. Copper is used in this next, if we go into, let's say we have an energy crisis, and let's say they want to solve it by spending trillions of dollars into renewable energy and upgrading grids and all this other stuff. Maybe we're at peak oil, and maybe that's what they think, and maybe that's where that they want to go that direction. So if they're going to dump all this money into it, I think that it's going to have to cross through copper somehow. So copper is a good spot to put some money. And I've got my companies that I like, the big diversified mining companies. I like those. And then I got, a small, more speculative royalty company, which is Nova Royalty. I know some people are going to say it's overvalued, but I like it. I think I like what they're doing. And then I've got all the big diversified mining companies that are just printing money, like Southern Copper, Vale, VALE. We've got Glencore, which is looking really good. They've got some of these have cobalt too. Norilsk Nickel, NILSY, Vale, Rio, BHP. Those kind of big ones, and they're paying big dividends. So what I do is I kind of overweight those and I just let them ride. I've ridden them up, I've come down, I've got dividends on the way, and I'm holding on. I'm not going in and out. If the inflation's there and interest rates start to move up, I think the money's going to come rotating in. And if we do these big packages, I think the money's going to roll in to all those companies. So that would be another spot that I would look at. And I also think with the 5.5 million home shortfall and deficit, I'd take a look at real estate if you don't own any. That's me. If you can find a good deal, or if you can find something that is in a good area, I think we still have another 5-10 years of real estate price appreciation, and some of it could be pretty big. So I do think that is another spot that I could potentially, look at. And I purchased a home a couple years ago, and I'm riding it higher. And I'm not doing it. I had to buy a house. I had to buy one. I have to live somewhere, and renting was. I could see before it happened. I'm like, this is going to get in a bad situation, and then everything else just made it worse. Here's one. I like to listen to Lobo, like to listen to all the interviews and process the info, and draw my own conclusions. Good for you. That is exactly what you should be doing. You shouldn't take whatever I say at face value. Listen to it, bounce it off some other people, and then just tear it apart and keep what you think is good for you and what works for you. He says, Rick Rule, Justin Hune, Andy, Trader Ferg, Crux. There's a lot of really good information. And I'm trying to think of who I would consider to become a really good investor. I think you have to be pretty well-rounded. And what I mean by well-rounded, a lot of people look at finance stuff, or they go into a sector and they just stay in that one sector. The problem is there's other sectors, there's other things that influence that one sector. So to be really, really good, in my opinion, is you have to know a little bit about a lot. You have to know what the real estate market's doing and tie it into investing. Because if you want to learn, check out the real estate cycle and the business cycle and how these kind of overlap. That is important because that impacts your investments. It directs where money flows into assets. And that's where I would really try to get good at, is that macro picture, the macro trends. And if you can kind of get a good picture on the macro trends, that'll give you a whole bunch of confidence to hold through thick and thin of good times, because you can identify when you're in good times, and you can identify when you're in bad times. And that's when you want to invest for the big trends. You don't want to invest for this small 50% movement stuff, because you're going to be going crazy trying to time things, and timing, in my opinion, just doesn't work very well. The shorter term you get, the harder it is to make money, in my opinion. If you need a big long trend or big picture view of something and then just ride the entire trend, you'll make far more money and have way less, we'll call it stress on yourself. So I would look at it from that perspective if you're trying to learn investing. And I mean, a lot of people don't talk about investing and what you got to do. I mean, here's something. After you can spend all the time in the world knowing the macro picture, knowing all these ratios, knowing all this data and all this stuff. And here's the honest opinion right here. If you want to be an exceptional investor versus a new investor, this is what separates this newbie investor and an exceptional investor. It's called patience. Patience and being able to control your emotions. No one can really teach that to you unless it's yourself, or if you have a mentor where you can come on this channel here and I can help everyone, and put it in the comment section if you guys are having problems. And there's different personality traits. Some are easier to handle this and some it's a lot harder. You're going to have to ride through thick and thin, and you got to focus on the right stuff to allow you to have the confidence to ride through it. If you're not riding through that thick and thin, if you don't have that confidence, if you don't know what you're doing, more than likely you're going to see a big down day. Like Recaf today. Recaf today was down like 12%, 12, 13, something like that percent. I have a good chunk of money in there. And I'm looking at it and I'm going, it'll bounce back. Because I've done some research on the company. I think that they're not lying. And they have a lawsuit against them. It's probably from the short sellers getting their butts handed to them. And that's not that uncommon. You do get lawsuits against companies. I've seen it a whole bunch in companies that I've owned. But if you have that confidence, if you kind of done some research, you know where you are in the cycle, and you've done your research on Twitter, you're following Recon Africa, you're reading their reports, I don't think that they're lying. I think that someone is fabricating a story against them. That's my opinion. And some people don't want to invest in a controversial company like that, which is fine. But if they have what they have, the size of that oil field, that potential it could have, I'm going to throw some money in and let it ride. That's me. And I position sized it correctly in my portfolio. And I think we could have a good move if they are being and acting honestly. And I think they are. I don't see any red flags anywhere. And I don't, that's just me. So there's that. So you have to work on yourself and controlling your emotions and your patience. Think of this as one long plane ride, and you're sitting there and you're like, man, this is not going well. I'm bored. I don't want to do this. You're going to go through those dull periods. You're going to go through consolidations. You're going to go through pullbacks. And if you're continuing to have some sort of income, you're making money, then continue to cost average in when you see good opportunities to do it. If something's cheap, grab it. I mean, don't let it sit there. Take advantage of it, grab it, and then think about why you bought it. You should have an explanation for every single company that you own. And over time, my mental, when I look at a company, I buy it because of a reason. And my kind of, how can I say this? It's almost like I have to own it. I can't not own it. That's my strength of conviction in some of these companies. It's like, there's no way I can sell this company and buy something else. So someone would say, you're up 200% in a company. So I'll give you an example. SM Energy, I bought it at $1.50. It's now at like $33 or $34 or wherever it's at. I didn't check recently, but it's somewhere up there. What they were saying, even some people commenting on the channel, I said I bought it at $1.50. And this was back in 2020, October 28th or 27th. I bought it a couple times. Cost averaged in, and my average cost basis is $1.50. The lowest I bought was $1.46, I think. $1.42 or $1.46, $1.43, something like that. They said, well, why don't you sell it? The stock's at $5, $4 or $5. I'm like, this is going way higher. And what else am I going to buy? What's a better value than this company? Then it goes to $10, and they're like, you should sell it. You have a profit, sell it. Well, why? Why would I sell it? It's got good value. The oil price is like recovering quite dramatically. Why would I sell it at $10? Then it's at $15. Hey, you're sitting on a 10 bagger. You should sell it. Why would I sell it? The value is still good. What else am I going to buy? I'm going to sell this and buy what? I don't have anything else to go into that I think is better than SM Energy at a $10 price. Now it's at $32 or $33 or whatever it's at, 34. And I'm looking at it going like, I still want to hold on to this. It's still of good value. Why would I sell it? And you can take profits. That seems to be the cool thing to do, but I don't know what else to buy with it. If I don't have anything else to transfer it into, if I don't find a better opportunity than that, I'm just going to leave it in there. And I'm pretty well diversified across a bunch of different companies. If something happens, it's not the end of the world. But I'm also an extreme bull in oil. I think we could go far higher than where it is today. And yes, I will take profits at some point, but I don't know what else to go into. I want to own that company. I don't want to reduce my exposure. Like, it's ingrained in me, like, this could be a very good thing. So I want to be a part of it. I don't want to be on the sidelines with some cash that is getting devalued. I want that to be my chariot forward. I want that to be my vehicle. And I've got other ones too that I like. Centennial Development Resource. I have to have it. So I don't know what else to do. And Recaf has a spot in there. That could be one of the largest oil finds in the world. It may not pan out though. Remember that. And Baseload and all these other companies, these uranium companies. I look at them and say, man, the valuation is still good in uranium. So I think it's going to go far higher. And a lot of these people on YouTube, and maybe even including myself or whatever, none of us have the answer here. I know that you're going from video to video trying to find answers. You're trying to find data. You're trying to find all this stuff, and it becomes a little bit of an obsession because perhaps you're trying to make money to get out of the situation that you're in right now. Maybe it's a job, maybe it's a financial problem, maybe it's anything, and you're going to be searching and seeking these answers to find out what you want to know. I was there just like everyone else. I have a day job. I go work. Sometimes it becomes monotonous. Sometimes it's okay. You have your good days and your bad days. But and some people are just genuinely interested in this stuff. But whatever you're interested in, whatever you're trying to learn, it has to manifest itself. It has to have an end result that makes you a better investor. So if it's not making you a better investor, if the content that you're listening to isn't progressing you forward, then why waste your time on it? So let me know what you guys need. Put it in the comments section on what you think you need to develop. It doesn't even have to be a content from me. Doesn't matter. Just put down in there what you think you need to develop as an investor. I'll do the same thing. I'll put it in the comments section. I'll say, this is what I need help. This is what I need to develop to become a better investor. I'm going to put it in the comments section just like everyone else. Put it down there. We're going to do this every once in a while. Put it in the comments section and go back and read what some of these comments are. And maybe I'll do that too on what you need to develop to become better at investing. So I'll start with the first comment on what I need to work on for myself. And every time when you're going through and you're learning and refining yourself, because remember, this is self-development here, you have to look and say, what am I doing good? What am I doing bad? And if something's really working for you, do more of what works for you. If something's doing really bad, maybe not do that. Cut it out. Or develop it and become better at it. You don't have to be the best at everything. That's another really big trait here, is you don't have to be the best investor, and you don't have to be invested in every single sector. You don't have to know everything. You have to just be really good at a couple of things. And when the timing comes and you identify the value, you identify the opportunity, you grab it, you take it, that opportunity, and you develop it, or you hold on to it, whatever that opportunity is. It could be in life. It could be a house that you find that's of good value. It could be a good job opportunity. It could be a good investment opportunity. You take it. When you see it, it's there. You can recognize that value. You hold on to it. You let that value mature and realize its full potential. And then you can sell it or get rid of it. And if you have a couple of those in your life, that could change your life. It could go from struggling to being very well off. And it only takes a couple rides or two. Sometimes it can be that life-changing. So continually develop yourself. And a lot of this stuff is incredibly important because you don't have that many long, big-term opportunities sometimes. And remember, when you're young, you have a lot more opportunities. You can go in far more directions. And whatever path you take, you're probably going to go down that path for a good long time. And other people are going to see that you chose that path, and they're going to try to continue down that path. It's harder to change stuff later in life than it is kind of when you're young. So hopefully that, I know I kind of went in that off on that tangent, but hopefully it helps you guys in your investing. Hopefully it helps you in your life. When you get this stuff all ironed out, you get some good opportunities and you capitalize on those opportunities. It can change your life for the better. That's for sure. If you guys like this content, give me a thumbs up. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.